Dawg, you guys. Welcome back to the Invested Dawg. D-Wave Quantum is under a lot of scrutiny right now because its Q1 reports were not favorable. I just came across this article and it was talking about how D-Wave is down 81%. Why a booking surge is the real story. So I just wanted to jump online really quick and talk about this. D-Wave Quantum, ticket symbol QBTS, one of several companies exploring the commercialization of quantum computing, reported its first quarter earnings results this morning, May 12th. Right now, we are already at the end of the stock market day. It is 7:18 p.m. and I think they published this, want to say like noon or 1 or something like that. I know this report was written at 4:17 p.m. The company's net loss of nearly $18.5 million came in smaller than expected, while the revenue of nearly $2.9 million missed the Wall Street consensus estimates. So, what in the world is going on? Quantum computing stocks like D-Wave have absolutely exploded. They exploded since 2024 due to the surge in energy, due to the surge with energy stocks, with oil stocks, with gas stocks. I do say that it is pretty safe investing in energy computing stocks. I think that this stock falls a little bit more on the tech side, and the tech side, you always have to be a little bit more cautious. Traditional computers are built on the foundation of bits, the smallest unit of digital information. Quantum computers are built with qubits. I don't even know how to say that. QUBITS, which have parallel processing capabilities and can therefore process much more data and capture much more complex calculations. Quantum computers are quite complex to build, but the market seems to think there's a strong evidence that commercialization might be possible. Is D-Wave Quantum a buy following its recent earnings report? Who knows? I'm a little bit on the fence when it comes to this. D-Wave is one of the only companies pursuing both quantum computing and other traditional gate-based quantum computing processes. Gate-based quantum computing is based to solve a much wider set of problems, but the systems have been trickier to build, often because they have higher error issues. In this quarter, the Q1 2026 quarter, D-Wave reported closed bookings for $33.4 million, an increase of nearly 2,000% year over year. The bookings include the sale of their $20 million quantum systems with Florida Atlantic University. We just spoke about them and what this deal includes, as well as a 2-year, $10 million quantum computing service agreement with the Fortune 100 companies. D-Wave is also acquired a company in the quarter called Quantum Circuits, and we read an article about this. We did get into what that will entail for D-Wave, and all of this will help build the error correction model. I am not too sure about D-Wave. I think that we should be watching D-Wave to see if they are going to be able to bounce back. More than likely they are. More than likely they will have a surge. So this could be a great time for you all to invest your money and just ride it out. But be cautious when investing your money when it comes to this. D-Wave faces tough comparison after the prior year's system scales. The quarter revenue decline was largely tied to difficult comparison versus the first quarter of 2025, when the company reconsidered and recognized almost $13 million compared to today. And D-Wave reported first quarter 2026 bookings of $33.4 million, up to over 1,900% year over year and about 150% higher than the prior quarter. The total includes a $20 million system purchase agreement with Florida Atlantic and a $10 million 2-year enterprise quantum computing as a service deal with the Fortune 100 company, with the Fortune 100 customers, I should say. I do think that they are going to be able to bounce back, but it may not necessarily be as smooth of a bounce back as what we would want it to be. In January of 2026, D-Wave acquired Quantum Circuits, a developer of error corrected. It's an error corrected company. And the company also laid off their targeted roadmap milestones, including a dual railed system, roughly to about 175 physical units. And in 2028, we'll see how that all plays out. They have to ensure that they make a strong comeback for the rest of this year. In 2026, D-Wave cannot continue to miss quarters like they've been doing. Q1, they were able to make it. They were able to slightly beat their earnings per share. In 2025 Q2, yes, they missed it. Then they were able to beat it in Q3. Then they missed it again in Q4. So it's been on this vicious up and down cycle of making it, not making it, making it, not making it. Again, as always, the numbers never lie. Revenue versus earnings. I do not like to see this. I do not like to see earnings so far down. And yes, they're not just spending money. It's a long-term gain. They're reinvesting that money. But how long will they be able to sustain that practice? Let me know what you guys all think about that article. And of course, let me know, send a personal message or make a comment down below. But this article is from the Motley Fool, and all you have to do is go onto Yahoo Finance and see it. But it is, man, I'm hoping that this is not going to be a greater free fall than what it already is. And with that, you guys, this is the Invested Dawg signing off.